Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from G5 Entertainment, a developer and publisher of free-to-play games for smartphones, tablets, and computers. Please note, you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I am very pleased to welcome Vlad Suglobov, co-founder, CEO, and board member of G5 Entertainment AB, which trades on the OTCQX Best Market under the symbol GENTF, and on the NASDAQ OMX under the symbol G5EN. Welcome, Vlad.
Thanks, Matt, and welcome everyone to the presentation of G5 Entertainment AB. We are a developer and publisher of casual free-to-play games. You can find our games on your smartphones, tablets, and also personal computers. We are serving a $90 billion market of global mobile games. We have 11 offices worldwide with developers and marketers that bring these games to life and bring them to the end users. We have strong history in creating and publishing financially successful games. The Secret Society made over $100 million in sales over its lifetime, and it was eclipsed by Hidden City, which made over $400 million. Some of our games become very big and very successful. We've developed several tens of games over the course of the years. We are focused on an audience which is predominantly female, 35 plus. If we look at the audience playing our games, about 70% of our audience are women 35 plus. If we look at the paying audience for our games, it tends to be even more female, like 80%, and tends to be also older, especially in hidden object games. So the highest paying audience in our hidden object games would be women 55 plus, for example. The company was founded 20 years ago and listed on NASDAQ Stockholm since June 2014, and we were public in Sweden since October 2006. As you can see on the right, the company went through some periods of fast growth, increasing in revenue dramatically. This usually happened when we have created a game that was able to scale to very high levels of revenue. We had several such hits, and one after another, we've built the company into what it is today. G5 is also a story of improving profit margins. You can see the gross margin chart on the screen. Initially, a substantial part of our revenue was games published by G5, but developed by other developers. This percentage went down over time, and accordingly, the amount of royalty that we pay and revenue share that we pay to other developers has decreased dramatically, which improved our gross margins. The reduction of store fees by Microsoft specifically also was a big factor in the improvement of our gross margins over time. And then the recent development is that we do more direct-to-consumer distribution through G5 Store, which helps minimize store fees to single-digit percentages in our own channels, which also helps expand our gross margins and improve our profitability. So if we look at the operating locations, the company originally was established in Eastern Europe, and Ukraine remains our largest office. Of course, a lot of employees are now in other countries, and they're also kind of displaced within the Ukraine, but they're safe, and we're back to 100% efficiency of work when it comes to the development and marketing of our games. Headquarters are in Sweden. We have a small presence in California. We have also our development HQ in Malta, where we have around 12 employees, and this is where the game IP is. And then we have a number of offices which provide services and development and marketing of our games. If we look at the market overall, of course, there was this pandemic story of demand that increased sharply, and then the decline of the market following the reopening. Still, even after that, we have forecasts for the market to continue growing at a healthy rate, and mobile games remain the largest part of the overall video games market. If we look at the game structure, a good half of it is Asia and China specifically. We have a revenue distribution which is skewed towards Western market. North America is our largest market, followed by the European Union and Europe, Asia, which is for us mostly Japan, Taiwan, and the rest of the world at 5%. So, virtually all of our revenue basically is made in North America and in Western Europe, with largest countries in these regions responsible for most of our revenue. If we look at the trajectory of G5 development from the product and development perspective, we had important milestones, not only when it comes to publishing some successful games from other developers, but also in producing games from within G5 that have achieved substantial revenue, and which now are responsible for more than 70% of the company's revenue. So in 2019, we started releasing games which we call new generation of games. And this new generation of games have generated Jewels of Rome, Jewels of Egypt, Jewels of Wild West, what we call Jewels family of games, which have grown quickly and then settled on a very stable and sustainable plateau. These games are responsible for about 30% of our revenue. Then we've released a game called Sherlock in 2020, which was growing ever since then, and currently sort of settled on a plateau this year. And this game is responsible for, I think it's less than 30%, something like 27% of our revenue. So you have two large groups of games that were developed internally within G5, and which are responsible for the biggest chunk of our revenue for our own games. And then, of course, there's this big published hit, Hidden City, from before, which is less than 30% of the company's revenue, but it's like the third big part of the company's revenue. And since a couple of years ago, we've launched G5 Store, which was growing on average 100% year over year since then. And it continues to grow this year also at around 100% year over year pace. And this is our direct to consumer channel, where store fees are not like on Google Play or iOS 30%, but more like just 5 or 6% processing fees that we have to pay for the payment providers. But otherwise, we get to keep all of the money that our players spend in our games. So obviously, as this segment of our revenue is growing, our gross margin is improving, and we're able to keep more and more revenue that our players are spending in our games to ourselves, which helps our profitability. If we look at the life cycles of creating a life cycle of a game and the stages of creating a game and putting it out in the market, it all starts with a game idea. And our process is that we try to test game ideas early on to only work on those where we see the most potential. And then from that, we go to the early soft launch development, where based on the idea, we are creating a build of the game which is limited in the depth of the gameplay, but which allows us to bring it to the users in a narrow market and test it with the real users to see if we can achieve the benchmarks that we set to ourselves in terms of the KPIs that we want to see in terms of user behavior, retention, monetization, and so on. We aim to develop 5 to 6 soft launch builds in a given year, and we expect that 1 or 2 of these games will graduate into the global launch, meaning that in 1 or 2 games we expect to see, or we'd like to see, we work hard to see that they deliver on the benchmarks which we've set. And once we see that it is true, we can proceed to release the game globally. Why it is important for the game to hit on those benchmarks? Because these are the benchmarks which mean that if this game is to be released, we should be able to meaningfully scale it. And if we are able to meaningfully scale it, it means that we will achieve monthly revenue and peak monthly revenue, which means that over the lifetime of this game, we're going to make substantial profit that will have a meaningful impact on the company's top line and bottom line. So when we have when we're doing the global launch, we're starting to acquire users into the game at scale, right? And user acquisition is when we spend money to attract players into the game. And the premise is that we should be able to acquire users for less money than they bring us over the lifetime of the game. And there's some predictions that we have to work with, of course. And as we increase user acquisition spend, the revenue, if the game is scalable and responds well, the revenue goes up. And as long as we can continue increasing the number of players that we acquire at about the same cost per user, we can continue with increasing the revenue from the game, right? So while the equation still makes sense, we can continue going up. Sometimes we're able to improve the game and resolve certain issues and lower the cost of acquiring or improve the LTV. This is a never-ending work. And then the lifetime, not the lifetime, but the stage of reaching the peak revenue of scaling the game can be extended. But one way or another, usually a game reaches peak at some point where we conclude that further marketing full scale doesn't make a lot of sense. And then usually what happens is that the marketing spend is dropped to a more reasonable level, and we sort of cash out of the game, maintaining a very long tail of revenue and profits. So this is a really nice stage in the game's life, because this is when the game makes a lot of money for the company, and we can also probably reduce maintenance of the game, reduce the team that's working on the game. And then we can stock up this long tail revenue from different games, because this long tail can last over 10 or 15 years. It's the longevity of high performing games in that sense is very amazing. Our oldest hit, The Secret Society, is now more than 10 years old, and it continues bringing profit to the company every month with minimal expense. Our target audience is, as I've said, is women 35 plus, the general demographic. Doesn't mean that men don't play our games. About 30% of our audience are men. We can, if we had to rephrase it, in some other terms, in terms of genres, our games are for people who like to play puzzle games while advancing in a certain adventure. So narratively, it's an adventure, and you progress through this adventure by solving puzzles. And that's what kind of unites all of our games. 2 biggest genres for us are hidden object, where you solve hidden object puzzles, and match 3, where you solve match 3 puzzles in order to achieve something. In Sherlock, you progress through Sherlock's adventures, and you progress in the adventures in other classic books. In Jewels of Rome, you solve match 3 puzzles to rebuild a destroyed ancient Roman settlement. In Mahjong Journey, you solve Mahjong solitaire levels in order to progress on the journey around the world, and so on. We try to venture out into new genres every now and then. For example, we tried some board games, and we have a merge game in let's call it soft launch, in kind of a variation of a soft launch as well. So we are going to continue finding ways to get into new puzzle genres, but for now, Hidden Object and Match 3 are our largest, and Mahjong Solitaire is the third one in terms of where we make money. Also, all of our games have G5 Friends network built into them, which helps us to do cross-selling between games, which adds some friends activities for our players, allows them also to bring their progress from one platform to another seamlessly, and so forth. You can give gifts to your friends, etc. So we find it very useful. So we use portfolio approach with our games. We have a concept that it is difficult to predict when exactly a hit is going to happen, and so we try to launch a number of games, and we try to maintain a portfolio where even if we attracted a player and they did not necessarily like this one particular game, they will be able to find some other game that may be interesting. And we see a lot of this happening where we cross-sell players from one game to another, and if they don't monetize in one, then maybe they monetize in the other. And the fact that all of our games appeal to broadly the same demographic really helps us extract this additional portfolio value from the users and from the cohorts that we acquire. We've been busy in the last few years, first of all, strengthening our development teams to ensure we have the development capacity to produce successful games from within the company, as opposed to licensing from outside. And we have successfully delivered a number of very successful, highly profitable games, such as Jewels of Rome and Sherlock, from within the company. Last year, we've also made this change where we have reworked our development funnel and said we're gonna set high enough benchmarks that we do not release many games every year. We would still cycle through a lot of ideas and through a lot of soft launches, but we would only allow a game to be released globally if it meets certain benchmarks, which we set. And so that way we will avoid releasing games which are not meaningful for the financial and fundamental results of the company. And we will spend less time we will waste less time being involved with these games, and instead focus our efforts on games that really have potential. So it's a multi-stage process where we select ideas, and they have to pass certain tests and reach certain benchmarks. And then, as I explained, we are developing a soft launch build, and that soft launch build has to pass certain tests and benchmarks in order to graduate to global launch. Just to give you an example of how wide this funnel is, the number of ideas that we work on right now, new game ideas, is about 30-something, 36 or so. And then we have about 7 games in the soft launch phase. And working on all of this through this year, we so far have decided that we're certainly launching one game globally before the end of the year. So from 36 ideas down to one particular game that we're launching towards the end of the year, which seems to have which have cleared the benchmarks that we set in the process. So we're very excited about that game, but we can talk about it later. When it comes to our current portfolio, we have over the years consistently grown the revenue share generated by games that we have developed internally, and now it's over 70%. New generation games launched after 2019 are more than 60% of revenue. Sherlock 24%, Jewels family of games about 31% of revenue. When working on new games, we are trying to use what we already know, use our existing technology to bring to the market something that we see users are excited to play and click on. And that's how we think about new game ideas. So it's not like we go completely off the course. We still design new games for this existing demographic, taking into account our experience, our existing gameplay platforms and engines, and we're reusing all that to minimize risks. So other things that we were focusing on in the last few years is improving our efficiency in user acquisition. And we've developed a suite of tools internally, which helps a lot with improving that. And really, the company made a substantial change in terms of its marketing operations and the sophistication of the marketing tools over the last few years. This work is not over yet. The marketing in mobile games, as you know, is affected by the privacy considerations and changes by the platforms. So we are dealing with that. We continue improving our tools. We have a plan in place on how we will be able to continue marketing our games successfully, and we are executing on this plan. And we're building a foundation for future growth. Of course, the triggers of such growth will be successful games that we release and are able to scale. We need hits to get to another level, and we're busy creating these games. So with that, let's talk a bit more about G5 Store. As I mentioned, we launched it as an experiment about 2 years ago. It started growing quite fast, and it continues to grow at about 100% rate year over year. You actually see the chart here on the right. In the last quarter that we have reported, the second quarter this year, we reached almost 10% of total net revenue through G5 Store, and that's up from about 4.3% last year. Some of our peers report up to 25% of their revenue coming from direct-to-consumer channels. So this makes us optimistic that G5 Store has room to grow, and because it has dramatically lower processing fees compared to the store fees on other channels, we see a lot of potential for the improvement for gross margin and profitability as G5 Store continues growing. So we have financials for the second quarter on this slide. Well, what's important? We've delivered EBIT margin of 12%. This is in line with our we called it a new normal in Q4 last year because of the changes we've made to the development funnel in the third quarter. The EBIT margin sort of has changed and kind of settled on this new level that we've called the new normal. Operating profit was 38.9 million SEK, and that was up quite a bit from last year's 1.0, but last year it was affected dramatically by the user acquisition boost that we did at the time. So it's not representative. But overall, Q2 this year, as we delivered it this year, is in line with the performance that we've delivered in Q1 before that and Q4 of last year. And we call this level of performance the new normal, and we expect that Q3 and Q4 this year is going to be in line with that. So we aim for stability, predictability, and kind of the same level of UA spend, user acquisition spend, the same level of margins through this year. User acquisition costs were about 19%, I think, Q4, Q1, Q2 this year as well. So we have high cash generation. We are profitable. We are cash flow positive. We've just paid a dividend, which was the highest dividend we paid in the history of the company. That happened in June, and we continue to use this positive cash generation to do buybacks. And we have, in the last couple of years, I think we bought about 1 million shares of the company out of the 9 million that we had. So we've been doing that. And despite all of this, our cash position remains strong. Last year, I think we even set some records in terms of the cash position in some of the quarters. So did I mention that we have zero debt in the company. So a strong financial position, profitable, financing our marketing, financing our product development, and doing buybacks and waiting for our development efforts to generate a game which we will be able to scale and take the company to the next level. So for the rest of 2023, as I've explained on the previous slide, you can expect continued stability in terms of profitability, revenue generation, and so forth, and user acquisition spend. Our goal is to release 1 or 2 games globally in the second half of the year. The potential impact, though, is not going to be seen until 2024, realistically. So again, stability for the rest of the year. We have 36 new games, 7 games in soft launch development, 1 game on the way to the global release towards the end of the year. So there's a lot of work going under the hood, going through game ideas, trying things, finding games that will be able to scale and change the trajectory on the top line. G5 Store will continue to be a catalyst for the improving gross margin and profitability because it continues growing about 100% year over year. We see this dynamic continuing. We continue to have discipline in our cost structure. We expect to have some savings due to the integration of generative AI tools in our development pipeline. It's already happening. We are already saving some money with it, and we see future potential for saving even more. Our user acquisition spend will be maintained in the range of 17 to 22%. We'll continue to strengthen the balance sheet through strong cash generation, and we are committed to continuing with the dividends and the buybacks. So that's the outlook, and this concludes my presentation. Thank you for following G5, and we'll proceed to questions and answers. So we have a question here. Here's the first one that we have. Are you growing in line with the market? How do you see 2023 developing for the broader mobile games market and for G5? We are actually underperforming the market slightly in the absence of new game releases. But also, despite the forecasts for the growth of the market in 2023, at least through the midpoint of the year, I think overall market seems to be down slightly, sequentially from Q1 and also year over year. We believe that with the help of the new game releases towards the end of the year, we can improve the top line performance in 2024 for G5. And again, until then, we continue to be profitable, cash flow positive, and deliver great returns to shareholders. We have another question. Given your strong cash position, are you considering M&A? Well, certainly in the new economic reality, the valuations are becoming more reasonable. It happens gradually, and it makes us more interested given our positive cash generation. But I'll leave it at that because there's nothing else to say beyond that. Next question is, the quarter to quarter, the margin rose from 11% to 12%, mainly due to G5 Store. How do you see margins developing in the second half of the year? Well, again, the underlying trends that we have, they support margin expansion. As I said, G5 Store is growing and has minimal store fees, so that's a factor. And the percentage of revenue that is generated by our own games continues to go up gradually, so that's another positive factor for the margins. However, there are moving parts such as currency exchange rates and interest rate environment. And I mean, assuming all other things being equal, and assuming the regular seasonality pattern from now on, I would say our profitability should continue to very gradually expand. But of course, all other things being equal, and there are some other moving parts that are like currency FX. So it's hard to say what exactly it's going to be, but the overall trend should be gradual and positive. The next question is, could you elaborate on the potential you see in the two games you aim to release globally in the second half? Again, we with one game that we're certainly releasing, we see that it meets the benchmarks that we have said that we will aim to clear. And these benchmarks are set at a level which, for us, means that we should be able to scale this game to substantial revenue levels. These benchmarks are not set too ambitiously, but they're set at a level where if we reach this level of scale, this will be noticeable on the top line and on the bottom line as well, and the game will make a lot of money, a lot of profits for the company going forward. So this game has cleared these benchmarks. So we do expect this game to scale. However, you have to also remember that this is all kind of either a mental experiment or an experiment on a limited number of players in a given country. So once we actually globally launch the game, we will start doing things like buying at scale, which we are unable to sort of model or actually try and practice before we actually globally launch the game. So there is uncertainty. And when we launch the game and we see how it performs over the first month or two, we will have much more data and we will have much stronger opinion about how successful this game is. And we will certainly communicate that to the market. So this is how we designed it. It's the first time that we will be globally launching the game that went through this new process. So we are excited and a little bit scared at the same time, but soon enough we'll do it and we'll see, and we'll tell the market what we see in the data and whether it confirms our new approach to the game development that we've implemented and we kind of worked with over the last year. And then the second game is, I didn't talk about the second game, but the second game comes close to these benchmarks, but it doesn't clear them formally. So we're still iterating on that game, and maybe we'll launch it this year, but maybe we'll launch it early next year. So that's the situation right now. And again, we promise to globally launch 1 or 2 games a year. So one we're certainly doing this year. So we're keeping our promise in that regard. Next question. Didn't you expect the UA boost to help sustain Sherlock's revenue growth? How was it impacted by the reduction in UA spent during the quarter? Well, yes, we did, but it was 1 year ago, and we did it 1 year ago, and since then Sherlock continued growing for quite some time after this boost was made, and it was still 12% higher year over year in USD revenue in the second quarter this year. So we keep in mind the boost was only happening a few months, and we have reduced levels for UA for the game a long time ago. So it's been Q3 and Q4 and Q1 and Q2 of normal user acquisition spend level for Sherlock now. So almost a year. It was just one quarter boost. It was 3 months. It kind of affected 2 quarters last year, but it was still like a 3-month period when we've boosted the user acquisition expenses for the game. So for Sherlock going forward, we expect it to be stable, and some of the slowdown that we're seeing on it, we explain by seasonality. The game is more mature. It's been in the market for 3.5 years, so there's more pronounced seasonality to be expected. We also expect it to pick up slightly towards the end of the year as we enter seasonally higher period of time. And if I didn't explain it, but usually we the seasonality for revenue is such that Q1 and Q4 usually are stronger in terms of revenue and player engagement than Q2 and Q3, which tend to be kind of summer quarters, like warmer quarters, and kind of weaker in terms of revenue generation and engagement. Next question: what are the growth drivers for revenue and profitability in the second half of the year? Yeah, well, it's as I said, stability is what we have in plan through the rest of the year, and there's not a lot in terms of the revenue drivers. G5 Store continues growing year over year very impressively. However, that probably will have more effect on profitability rather than the top line. With all of the other games pretty much stable at this point, and the new game only coming out at the end of the year, I cannot offer anything other than the seasonal improvement towards the end of the year in revenue from the existing games. Still, there are positive factors for profitability that I have mentioned several times before, but G5 Store, an increasing percentage of revenue coming from our own games, all this will help us have profitable and stable performance through the end of the year, at which point we're going to have some news to share about how from the early results of the global launch of the new games. And while we're staying being profitable and cash generative, we'll continue with the buybacks, and we'll continue with the good cost control, and we'll continue working on new game ideas. And then with the new game, most of the positive effects that we can expect from it we'll likely see in 2024, not this year, because it's still going to be very early in terms of the new games revenue development. Thank you for your time.